Hello there, this is FairBinaryOptions.com, and this is the euro and Australian dollar on this Thursday ahead of the ECB presser or the ECB press conference. In the meantime, we already had the interest rate decision, and the interest rate was a non-change. Of course, nobody expected that the ECB is going to change anything today, but the press conference should prove to be quite interesting. First of all, in the first part, Mr. Draghi is going to read the statement of the Governing Council, and that statement usually, let's say, sums up what happened since the last meeting until now. And we know by now, based on the economic releases, that somehow the economic environment in Europe is changing for the better. With or without the QE, we don't know that. But the second half is destined to questions and answers, and most likely the Greece situation is going to come up. I would say that is the main risk that this market is going to take. But this is the euro Australian dollar on the bigger time frame, trying to avoid any possible volatility that we are having from the ECB. And I would say that this is quite a bullish setup on the daily chart on, again, the euro and Australian dollar. For the whole move that started from here, seems to be a bullish pattern. I would say in terms of Elliott waves, this is the first wave to the upside. So this to be the first wave, let's make it of a different color like this. And then the second wave should end way higher than the first wave in a so-called running correction. Second wave should end around here. I don't know if it is corrected yet, or finished yet. But what I would like to do here is to label this whole pattern with the following structure. This is the first corrective wave, namely a flat. So this is being called a flat pattern. A, then the B wave. Like any flat, it travels with three waves, A, B, C, waves A and B being corrective, wave C being impulsive, so here's the impulsive move. This flat is being called an irregular flat, and the irregular flat is always going and takes the lows in the previous wave A, just like that. So A, B, C. And then we should look for what? We should look for an X wave to the upside, ideally a zigzag or a zigzag family pattern. And the zigzag or a zigzag family pattern is translating into a move that is channeling really well. Well, this is a move that is channeling really well. So I would say that our X wave ends here. So what do we have? We have one correction or one flat, an irregular flat, then the X wave or the intervening X wave, and then we need the second corrective wave as part of a complex correction, in our case the running correction. That is nothing but a contracting triangle, and like any contracting triangle, it goes with this being wave A, this being the B wave, this being the C wave here, definitely having the D wave around here, around these levels in here. I would say ideally in here, and the E wave is probably in the makings in here, A, B, C, D and E. Like any contracting triangle, it is traveling between the A and C and B and D trend lines, so we just gotta go and drag the A and C trend line from here to here. Then the B and D trend line from here to here. And just like that, we have a triangle, a so-called triangle that is non-limiting, meaning that the price action to follow cannot be put into a specific pattern. And this is as bullish as it can get. I would say the triangle is not completed yet, with the E wave is not completed yet, but about to be completed most likely this month, as we are right in the middle of the month. So what I would favor here is, of course, call options on the euro and Australian dollar with end of month expiration date. So call options for the euro Australian dollar with end of month expiration date is the recommendation on this pair. Thank you very much for being here. Have a great day, and make sure you check our fairbinaryoptions.com website, our Binary Options Academy, as well, as we have a lot of interesting projects there from both a technical point of view and a fundamental point of view. Thank you, and bye-bye.